Welcome to Financial Revelations. I am your host, David Safransky. You can reach us at Joshua at EPSF.com, Joshua at EPSF.com, or you can go on Twitter at FI Revelations. That's Foxtrot India Revelations on Twitter. And I want you to sign up there because I really want to do some surveys, but not enough of you are cooperating with me, and I'm about to get angry. And you don't want to see when that happens because I usually break something that I love. One time I was mad at in our first house. I had a hacksaw, and I was trying to saw something, and it wouldn't. All the teeth were broken on it. It was rusty and old, and I got mad. And my wife said, "Don't you do it!" And I threw it. And I threw it way across the room. I mean, not at anybody or anything like that. I was just mad, lost my temper. A piece of this hacksaw breaks off and comes back and hits my wife. I thought, wow, learned a lesson there, valuable lesson. Well, today I want to talk about 3 hot stock tips for a volatile market. And one thing is for sure, we are in very volatile markets. We have inflation. And the inflation, even though I do believe that Chair Powell is correct in that most of it is transitory, it just seems like the amount of time that it's transitory keeps getting stretched out for a variety of reasons. Although I read today that Canada opened up the border to Americans if you're fully vaccinated. Now, I realize that a lot of Americans don't want to even go to Canada, so it's not really that big a news. But things are kind of starting to loosen up, and that would be the big news there. I mean, unless you're running low on hockey pucks or maple syrup, you don't really need to go to Canada. The other thing is we have these COVID variants. We have Delta variant out right now. And I know that it seems like a lot of politicians are blaming unmasked individuals. However, a lot of vaccinated people are getting COVID. And so, yeah, about 50% of all Americans are fully vaccinated now. But, when I was growing up, when you got a vaccine, it was over. There was no more disease. And now it seems that this vaccine, well, it works pretty good, but it doesn't work perfectly. And so we're finding out a little bit more. So we have these COVID variants. Who knows what the next variant's going to be? We also have eviction moratoriums. And this is the kind of thing that stretches out and in a lot of cases makes things worse because it is true that there are some people who would be evicted if the eviction moratorium was lifted. But there's always people that are going to be evicted. This is not a new phenomenon. We have a whole process to go through this. And right now, if you are not paying your rent, I really have to question your financial choices because there is more money available for people via the government than probably almost any time in history. And so I read an article in the Wall Street Journal last week about a guy who his renters are not paying their rent. They did buy a boat, however. They had money for a boat. So they got that purchase down packed. The whole house air conditioning in his rental broke, and by law, he has to fix it. So he's out $5,000 on a rental property that the people aren't paying rent on, but they had money to buy a boat. Those kind of things lead me to believe that the eviction moratorium is going to be lifted by the courts. It is not legal how they did it. It's not even wise in the most part. We have spending bills that are going through. So as we speak, this infrastructure bill, the beginning of the new Green Deal, is starting to go through and to be followed on by a $3.5 trillion spending bill that is going to solidify the new Green Deal in our lifetime. So it's really bad news. That is extremely inflationary. And so markets are going to be volatile. It's just how it's going to be. They're going to go up and they're going to go down. And what we want is we all want growth. We want our investments to grow, but we also want protection. The problem with those two ideas is typically they do not go hand in hand. They are brothers from other mothers. They're not things that you generally talk about in concert with each other. So we're going to have growth and we're going to have protection. Normally, when there's a growth-oriented investment, the trade-off is protection. You don't get that protection. And when you have protection, the trade-off is you don't get that growth. I'll give you an example. A 5-year CD. A 5-year CD is essentially guaranteed if it's under a certain amount at the bank that you'd get your money back. It also pays 1.2%. So there's just not a lot of growth and protection out there. So what do? How do we develop a strategy? And that's exactly what we need. We need a strategy. We need a game plan. We need a track to run on. And I've always said, I learned this in the Army. I was in the Army for 10 years. I was a mechanized combat engineers. We really did three things. We drove tanks, we shot big guns, and we blew stuff up. We didn't build anything. Mainly our job was to break everything. And we got really good at breaking stuff. So if you ever need to break something, call a combat engineer. They will take care of things. So the three hot stock tips are this. Number one, I want you to be writing these things down. You got to have a budget. And I know you can say, well, that has nothing to do with stocks, but you gotta roll with me here a little bit and stick with me, because it is going to come back around to the stocks. You got to have a budget. You cannot invest your milk money. I don't want you betting your kids' next meal on the stock market. That is not how we do things. It is not wise. I don't want the market to go down and your kids not eat or you not eat. So the only way to know how much money you need for milk, bread, and eggs is to have a budget. And what we want to do is we want to take an amount out of your budget. I would say when you're first starting, for most people, any amount is good. Even $5 is good, as long as you get started. And that's what I want you to do. It's not the number that you're investing. It's not how much you're investing at first. It's the habit of investing that I want to get you down packed with. And then we can raise the amount as you get used to it. So maybe you tried for a couple of months and you think, well, I didn't miss that and I'm still eating, so raise it. But you got to know these numbers. So you got to know what you're spending on electricity and car payments and incidentals. And that's really where most people mess up their budget. It's not with the big expenses that you're writing a check for are coming automatically out of your account. I'm told that not a lot of people write checks anymore by people who don't write checks. But the fact is, I see a lot of checks. And I know people are writing checks, but we are a more electronic society now. So I get that, but you know those things are coming out. So it's the thing where you go to the store and you're off book and you're buying something. Those are the things where people blow their budgets. So have a budget. Don't be afraid to reward yourself for some success. And don't be afraid to tell yourself no. It's not a word we hear a lot today, but it is a complete sentence and it does work. Okay, so you're at the store, you're about to buy something that you really don't need, you really don't want, you have no place to put it anyway. Just say, I get that later, whatever. Move on. So you got to have a budget. You must have a budget if you want to be successful at this. The second hot stock tip is you must have an emergency fund, and this is non-negotiable. In fact, the budget is non-negotiable also, but this is especially non-negotiable because what happens is you got to have 3 to 6 months of your have-to expenses. And in order to know what your have-to expenses are, you got to be living on a budget or have some idea. Now, and I'm going to come back to the budget in a second because I want to tell you what it isn't. But the emergency fund, this 3 to 6 months of your have-to expenses, it allows you to be aggressive in the market. That's exactly what it does. It allows you to be aggressive without fear in the market. Because if the market goes down and you have an emergency, you're not coming to me for money that is worth 30% less. And there have been 3 times in my career where you had to have an emergency fund. 2000, 2008, and 2020, just last year. It happens frequently enough to where it's important to have. You must have an emergency fund. If you have no money in the bank, if you have no money set aside and you have credit card debt, you're being foolish, okay? If you have money in the bank and you have credit card debt, you're also being foolish. Don't run balances on credit cards. We don't do those things. But I wanted to go back to one thing about the budget. The budget is not a spousal bludgeoning tool. It doesn't have to be down to the quarter penny, okay? Think of it as a tool something to use to kind of stay on track, but not to beat each other up with. And men and women will both, a husband and wife can absolutely have the capacity to bankrupt the family. They just do it in different ways. My wife would do it one pair of shoes at a time, or one great deal at the store at a time, and I'll do it a couple of jet skis at a time. So certainly I am very capable of spending poorly, as anybody is. But this budget is more of a guideline, and that's what I want you to think about it as, a guideline. So the third hot stock tip that I have for you is, after you've done these two things, I want you to have an allocation. I don't want you to guess at what to buy. I don't want you to watch CNBC and have your, or Fox Business News, or read Money Magazine or The Motley Fool and get your allocation. I want it to be designed for you. And how you do this is, sometimes you have to get in touch with somebody like me, and you guys could call me. I mean, we don't charge for a simple consultation, but it doesn't have to be me. But get in touch with a professional and just say, how should I set up this portfolio? And realize that everybody has different risk tolerances. So somebody who doesn't mind if their money goes down in value 30% in a very short period of time, you might mind that. That might be very traumatic for you. You might have, in 2008, your family might have lost everything. In 2000, they might have lost everything. And so you have a different risk tolerance, and there's nothing wrong with that. I'd rather you manage that risk tolerance within reason and invest appropriately around that than fool yourself into thinking you're aggressive when you're really not, and the market goes down and you want to pull your money out. We don't want to do that. So I want you to have an allocation to your portfolio. And for most people, when they start small, we're going to start out with mutual funds because there's broad diversification from the first dollar that goes in, and it's pretty easy to get an allocation on mutual funds, and it's easy to do it cheap. You don't need to pay an upfront commission to buy a mutual fund. Do not do that. You're wasting money to pay a commission to do that, and I don't want you to pay commission. So even the highest commission funds are generally available in certain venues without a commission, and that's how I want you to buy them. And just one bonus about hot stock tips. Don't listen to hot stock tips. I know I just gave you 3 that didn't really have to do with stocks. It's really getting you to stocks, but you'll hear all the time about an internet stock coming out, or a SPAC going public, or something like that. It only makes sense for you if it's in your allocation. If it's not inside of your allocation, if it's not something that we want to do to get you to where you want to go, there's no need to do it. And it may make a lot of money. I don't even care, because the other things that we do probably will make a lot of money also. So when I've had somebody, one of the athletes that we work with will come to me from time to time and they'll say, hey, I want to buy this. I'll say, well, let me look into it. And why do you want to buy it? Well, somebody on the team told me about it. And invariably, it really isn't part of his allocation. And so when one of them makes money, he'll come back to me and say, see, I told you it made a lot of money. Well, the truth is, everything else we did at that same time also made a lot of money. So it's not like we didn't make any money in that time frame. I just want to stay in my allocation. I don't want to do things that are outside of normal. And in the same time, we'll probably do all right. So I want you to remember, you can email us if you have questions, joshua@epsf.com. He's going to put it up here. And you can follow us on Twitter @FI Revelations. And he's also going to put that up here. Look, reach out to us, ask questions. I want to interface with the listeners of Financial Revelations. We've had really good response. I'm really enjoying doing this, and I love talking to you guys. I am David Safransky. This is Financial Revelations, and ignore all hot stock tips.